Welcome back to the end of year investments, your live trading journal where we break down real trades, real results, and real lessons. Here we don't chase luck. We analyze structure, identify our edge, and extract opportunities from the market. Let's jump right into today's session. We're trading these gold futures. Once again, what we see is a nice bounce off of prior structure, 38.2% retracement. Broke up above our prior day low, and this red line that you see, that is actually last week's high. So potential key level there. So as you know, our method of trading is identifying our key levels and entering in liquidity zones. So open the market at 9:30. Not much really going on, kind of in no man's land. We fast forward a little bit. Now it's 10:06 a.m. and we are approaching prior day low. So another one of our trade entry criteria is not just appearing at a key level, but we also want to make sure that our entry is timely. So right now we're getting some downward pressure, and we only want to enter within a 5-minute window. So before or after every 15-minute close, we want to get a nice influx of volume into a particular direction. So right now we're looking at this prior day low, and it's 10:09. So we still want to wait. We want to be patient. We want to see what happens with the 15-minute close here. So we get some more liquidity pull and end up closing above this prior day low. And this gives us confluence and a confirmation that we want to continue to the upside. So we see price moving, continuing lower. So it could be liquidity if price continues to close above prior day low, giving us our break of structure retest entry to the upside. We want to see what happens here. Patience. So not getting as much strong volume to the upside. So it looks like we're not going to close above prior day low. Boom. We see we didn't. So now that throws out our initial thesis. Now what we're looking for is potential break of structure, retest, but to the downside. So fast forward, we didn't get that at all. Price never retouched prior day low, and it continued to sell off. So now we're looking at this key level of the 38.2% retracement to see what happens here. So once again, fast forwarding, I want to only give you entries, not all the fluff, but it does require some patience to sit and just monitor the market. Be a market observer. You don't always need to hop into a trade just because the market's moving. So it's 10:25, 10:26. Still want to wait to see what happens near that 10:30 close. Don't want to get swung out, as we see some buyers coming in, and price could move to the upside, but that's not our entry. We only want our entry. So fast forward again, 10:30 close happened. Got some liquidity below. So what I want to see now, or what I'm looking for, is to see if we get a nice liquidity pull below this 38.2 retracement, and I can get a nice bounce, even if it's a dead cat bounce, and squeeze out some profit there. So personally, what I like to do, I like to kind of wait, see if a wick happens, and not enter until this 15-minute candle turns green. So we got liquidity pull, candle turned green, but this is not an ideal trade, to be honest. We always want to enter in a liquidity zone, meaning below 38.2% retracement. But kind of got FOMO here, must admit. As you can see, we got stopped out. It just shows me that entry was not ideal. Even if thesis is correct or incorrect, that still was the trade that I wanted to take. So now we're reassessing. Want to enter again with a proper entry in liquidity zone. I almost stopped out there, but once again, that's what happened with big volume and a tight stop. So we got some upward movement. So this was a good sign at the moment. You see on the 1 minute chart, we got a doji. Some more upward pressure. So what I'm hoping for is to see a dead cat bounce and price at least go to fill the gap in some form or fashion. Try some more volume, stop out again. And that's fine because we have our trailing stop, and that got me out at break even. So we fast forward again, we see price dip down to a previous level, key level, identified by that purple line there. So now we have a break of structure. The correct analysis, and we'll see how I fucked that up in a few. The correct analysis is seeing once again break of structure, 38.2% retracement, and what we want to see is somewhat of a wick or a low volume green candle in this 15-minute time frame. So once again, being patient. This is 1039. Of course, you want to see, ideally, we want to see this 15-minute candle close to see what happens here. Does price bottom just fall out? Do we get a retracement, giving us an opportunity for an entry? So once again, patience. Just want to see what happens here. We got another 5 minutes. And we can see that I'm possibly, well, I am thinking about this all wrong. So I am still thinking about my initial, the second thesis I had on the last trade. Because we got to bounce off of this key level here, and we look like we can. This may have been a big liquidity pull, and we want to continue to the upside because we got rejection again. But that is why you wait until the close of the 15-minute candle to see how much volume comes in on this 15-minute candle. So we see here we got some movement up. But also signs of decreased volume on the 1 minute chart, as we can see. So this is showing that this is more of a dead cat bounce, if you will. So 1042, what I'm looking for is a retracement here, but looking too micro. But we should be looking at this 15-minute chart and seeing how much volume came in and how it's unmatched. So the volume price analysis. So we got decent volume on the 15-minute chart, but nowhere near the move. So this is where I should have entered to the downside, seeing that rejection there on this 1 minute chart and this long wick on the 5 minute chart at the top right. So this is where I should be entering, preparing myself for continued movement to the downside and volume to come in after we see that the buyers weren't able to take control even though they had nice volume. So I'm thinking correctly. Got the 2 sell contracts locked and loaded, should be entering here, but I didn't. So that is also why I conduct these trade analysis, going back to look what mistakes I made, how could I improve, what should I have been looking at. Just when you're in the market, your emotion can kind of take and get the best of you. Because everything here is telling me that we're continuing to the downside. But of course, want to be a contrarian, what we see is what I believe is a break of structure to the upside, but it's a break structure on the 1 minute. That's not enough volume for the type of move that I'm looking for. So see, enter trade here. It stopped out almost immediately. But we fast forward a little bit. What we see here after the 15-minute close, not much volume. What we're looking for now, this is third trade of the day. Normally try to take only two. What we're looking for here is a retest of this 38.2% retracement level. If price comes back up slightly above, we want to enter and ride to the downside. Wasn't able to get the entry that I wanted. Somewhat FOMO here, because I didn't want to miss the trade, because we can see very close to getting stopped out there. So this shows patience. I could have easily got a way better entry, not have this anxiety. 2 more ticks, this turns from a profitable day to a what the fuck were you doing type of day. So entry is very important. It's not about being right, it's about your entry. So here, but I'm already in the trade, so I just kind of ride it out. We got some volume here, just looking for a big sell-off. And we got some volume. So once we get to 30 ticks, my stop loss will move to break even. So I don't want to get swung out. And that's also why entry is important. Because given your entry, you can easily get swung out as price potentially goes back to retest the break of structure level that we're looking at. Volume, break even, because if you get a certain amount of dollars in a trade, you don't want to turn a winning trade into a losing one. That just doesn't make any sense. So given my entry was poor, I had to manage the trade slightly different. So move my stop loss slightly back, because we have some confluence and confidence in the trade, so we don't want to cut ourselves short too quickly. But long story short, you just want to be able to manage risk. So stop loss stays in effect. We got Judy calling me. Gotta go to work soon. So right on time. Try to be out of the market by 11, because anything after that is slow volume, and I'm just chasing trades at that point. So nice big volume. Stop loss coming in, trading. And move it back a little bit, give us a little bit of room to breathe. Moving that stop just in case we get a lot of volume coming in. And closed out. So went 1 for 3 for the day. Ended the day with $1,500 in profit. Was able to execute. And then great. See you guys on the next one, man. Thanks for visiting Dan Dier Investments.